I think we should pivot and talk a little bit about what where the firm is heading. We've done this pivot away from, I don't want to say away from office, but in terms of acquisitions, we're much more interested in multi-tenant light industrial.
Yeah.
We've had a lot of success. We've bought 4 deals in the last year, about to be a 5th. What do you think? What do you like? I'll tell you what I like about it. What do you like about the multi-tenant light industrial?
My whole real estate career, the one thing I've yelled out all the time is basis, 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 basis. So you want to be below replacement cost in anything you're doing if you can be. I think that the big bulk industrial is not trading below replacement cost, because when you look at replacement cost, land is such a huge variable.
Yeah.
When the market sucks, land's free.
Yeah.
Right. So land is a big variable when you're arguing what replacement cost is. The basis we have in all this multi-tenant light industrial is so far below replacement. Even if land was free, nobody's going to build any of it.
Yeah.
The land around our sites are not going to be multi-tenant light industrial. They're going to be either apartments, bulk industrial, or some other use, because they make more money. That's the highest and best use.
Yeah.
So I think we have protection because of replacement costs, protection because of alternative uses are more profitable. I think we have protection because we're in infill markets where there's very limited land, and we're in very high traffic areas where people want to be. And there's this product type has not been built in 20, 30 years. Yeah. So the occupancy in almost every market we're going into is over 95%.
I would only add that I like project size, because it's a smaller, you're talking 6 buildings that are 150,000 square feet, not 1 million square foot building. And because of that, we're not competing against the biggest people with the lowest cost of capital.
That's right.
We're not seeing Blackstone here. We're not seeing some of the bigger REITs here, because it's just, if they're going to spend their time somewhere, they get a less of a return, because the total dollars they can invest is only going to equal so much. Whereas for us and for our investors, it's real.
Yeah. On top of that, I would say it's an aggregation play. So you've got, in this particular element of industrial, the ownership is so fragmented. As you mentioned, there is no Blackstone that really dominates the space. So I've been fortunate in my career as a principal to aggregate some product types that had never been aggregated before. I think that you buy a series of $20 million buildings and you build up a $2 billion portfolio. You've created, and you bought wholesale. You're going to be able to exit retail to IPO or SPAC of the month or REIT or whatever that happens to be. But you're putting together something that Blackstone can't afford to do. Their guys can't afford to buy $10 million buildings, right?
They'd like to buy the end product.
Exactly. They want to be on the other side of that trade. So I like the disparate ownership in the product type as well.